Welcome back to the show, everyone. So usually when we get to December, the housing market goes into hibernation, right? Everyone's busy with the holidays.
Oh, totally. It's usually dead silence until spring.
Well, not this year. We just got the latest data from the Mortgage Bankers Association, and let me tell you, homebuyers are not taking a break.
Yeah, I saw this. Demand is actually hovering near the highest levels of the entire year in December. That is wild.
It really is. So let's look at the numbers. The MBA's Purchase Loan Index, which basically tracks how many people are applying for mortgages to buy homes, is tied for its second highest level of 2025.
And here's the kicker. If you compare it to this same time last year, purchase applications are up 19%.
19%? That's a massive jump in year-over-year activity.
It proves that people were just waiting on the sidelines for rates to stabilize.
Exactly. And there's an interesting detail in who is applying. Conventional loans dipped a tiny bit, but FHA purchase applications, those went up 5% in just a week.
That makes total sense. FHA loans are the go-to for buyers who need lower down payments.
Right. MBA economist Joel Can mentioned that prospective buyers are really hunting for affordability right now. Plus, inventory is gradually improving, so there's actually stuff to buy.
But wait, we have to talk about the refinance numbers. If you think the purchase market is hot, look at refis.
Oh, it's exploding. Requests to refinance were up 14% week over week. But listen to this. They are up 88% compared to a year ago.
88%. That is incredible. It seems like everyone who bought at those 7% peaks earlier in the year is rushing to fix that rate.
Seriously. In fact, refinances now make up over 58% of all mortgage applications. It was just 53% the week before.
That's a huge shift in market share. It's basically a refinance party right now.
And it's driven by the FHA rate dipping to its lowest level since September 2024. Government refinances alone jumped 24%.
So the million-dollar question, where are the rates actually sitting?
As of early December, the 30-year fixed is hovering around 6.25%. It's up a tiny bit, like 13 basis points from the absolute floor we saw in October.
But 6.25 is still way better than where we were in April and May when we were flirting with 7%.
Oh, absolutely. It's stable enough to keep people interested.
Now, we gotta talk about the Fed. They just cut short-term rates again on Wednesday. That's the third time this year.
Right, but they're also throwing a bit of cold water on the future.
Yeah, their projections are showing they might only cut one more time next year, and then once more in 2027. It's a much slower pace than people hoped for.
And that's the tricky part. The Fed is trying to figure out if inflation or unemployment is the bigger boogeyman right now.
Exactly. And remember, the Fed doesn't control mortgage rates directly. We actually saw mortgage rates surge late last year, even while the Fed was cutting.
It's a complicated dance. Just because the Fed cuts doesn't mean your mortgage rate drops the next day.
So where are we heading in 2026? We've got a battle of the experts here.
We do. Fannie Mae is feeling optimistic. They predict rates will fall below 6% by the end of next year.
But the MBA is playing it safer. They think rates will average around 6.4% in 2026.
So basically, somewhere in the low sixes seems like the safe bet.
Bottom line, if you're waiting for 3% rates again, don't hold your breath. But the market is definitely moving.
Yeah, demand is strong, refis are booming, and 2026 looks like it's going to be a busy year for housing.
We'll keep tracking the numbers for you. Thanks for listening, guys.
Catch you next time.